Let's bring on Aaron Dunn, Keystone Financial. You can find him at www.keystocks.com. Aaron, first of all, I look forward to, you're going to be with me again at the World Outlook Conference. We're doing something very special this year. Haven't done it before. This problem with getting yield, getting something above your 1% at the bank, or you're looking at 10-year bonds at 2%, it's been a challenge for several years now, so we're going to do a special breakout session on that starting 1 o'clock Friday, February 3rd. But that brings me to this. You were there last year, and I got to talk about a little company that you recommended because it's everything we like to accomplish at the World Outlook Conference. You talked to me about, and the whole group, by the way, Exchange Income Corp, and I had a look at it on Friday. My goodness, that's what I call performing.
Yeah, the company is up. The share price is up since the conference, 65%, but it also was paying a 7% yield at the time. So investors are basically getting a return of greater than 70%. And what I loved about Exchange that I was using it basically as an example of the type of company that we like to recommend. It's not something you can easily categorize into a particular industry, but it just had a lot of visible growth on the horizon, things that it was doing organically through acquisitions, and it was paying a nice yield. It was growing that yield. The valuation was good, and we had a lot of confidence in the management team. So it's great to be able to take those companies and use them as examples of what we look for when we're making recommendations. And it's even greater when we do that and the company goes up 70% and pays a really fat yield at the same time.
Well, yeah, I mean, absolutely. From our point of view, we have Ryan Irving was speaking on the main stage from Keystone Financial, and Ryan and Aaron and their team present the small cap portfolio every year for our World Outlook Conference attendees. Well, it's up 30% this past year. We've got other things. It's not just that. We got John Johnston last year, gave us absolutely the blueprint for what was happening with the Canadian dollar. Joseph Schachter's picks on the oil side were up over 300% on average. And I don't have to say much more about Martin Armstrong, Mark Leavitt on precious metals. So that's what we try and do there at the World Outlook, is actually make this stuff pay. And that's why I get excited, Aaron, when I see stuff like the Exchange Income Fund, and I see the kind of stuff that it's produced. But it's a fantastic call. You're going to be there again, talking about the search for yield. So let me ask you this. Is it a tougher environment this year than last year, given we've seen the states start raising interest rates?
I think that the environment is fairly comparable, and it changes a lot. It changes a lot. You find that investor sentiment goes from positive to negative with income stocks, and one of the things that can actually send share prices down just in the very near term is expectations that interest rates are going to increase, because people see interest rates as being an alternative. The bond market as being an alternative to dividend stocks. We understand that mentality, and to an extent it's true, but we think that it's very much overblown, the way that the market reacts when they think that interest rates are gonna continue to increase. And we've seen the cycle happen about 4 times over the past 5 years, where interest rates start going up. All of the pundits on the news say this is it. We're going to start seeing interest rates continue to rise to historical norms, and what that results in a lot of the time is a lot of these stable dividend growth stocks moving down in price just in the short term. But what we've found over these cycles is that the pundits have not been correct. That we're at a very low rate of interest rates right now at bond yields, and that makes it very easy for anything to cause them to bounce off of those bottoms and make it look like they're moving up, and that they're going to continue to move up. But what it does provide to investors is an opportunity to look at quality companies that will move down in price somewhat because of these fears, and they can buy these companies and they can hold them long term, and that has been the way to make money over the past 5 years, is not to just follow the market, but to have an independent mind and to look at the companies that you're buying and to understand what the fundamentals are and what is going to allow them to grow over time. And if you can do that, and you can take a mid to a long-term approach, you can look at an investment as something that you're going to hold for 1 to 3 years or 2 to 5 years, and not just what it's going to do over the next 6 months. If you can do that, then you can add these high-quality companies at reasonable prices into your portfolio, high-quality dividend growth stocks, and hold them, and you end up doing really well if you can exercise that discipline and that mentality.
Well, even me asking you, has the environment changed? I immediately think to myself, well, no, because a year ago, December 2015, we had the Federal Reserve saying the same stuff, that they raised rates in December 2015 and said we got another, I think, 3 coming, and of course that never manifested. So flash forward to this December, they're saying the same thing. So it's not just the analysts, it's the head of the Federal Reserve who's kind of had this one wrong. But it is interesting, your point is that the market reacts and it discounts those future rises almost immediately.
Yeah, and it assumes that those increases are going to continue. Like I said before, if you were to look at a chart of bond yields and interest rates going over the past 10, 20 years, you would see how ridiculously low rates are right now. And even the uptick in rates that we've seen since Trump was elected, I mean it's like a speck on that graph. So really, where interest rates are right now, I think it would be perfectly healthy if we had an economic environment where rates were to rise somewhat off of these levels. But they could rise quite a bit from here, and they would still be extremely low on a historical basis. And I think that's what the market really has to take into account. We could have the Fed move rates up 2-3 times over the next, say, 18 months or year or whatever it is, and you're still going to have extremely low rates, and you're still going to have a bond market that doesn't provide that much of a return. But our strategy as well is that, and what we always exercise is that we are not trying to predict the future. I'm not trying to say where interest rates are going to be in 1 year or 2 years or 3 years. Nobody can tell you that. But one way that we do mitigate the risk of rising interest rates is through growth, is because we're not just looking for companies that are paying a yield, but we're looking for companies that are paying a yield, that are reinvesting cash flow back into the business, that are growing their earnings and cash flow per share, and they're able to increase that yield over time. So if you're looking at a reasonable time horizon and you're investing in these dividend growth stocks, and we think that they're going to continue to do well, even if interest rates and bond yields continue to rise from this level.
Is there a challenge? Because I'm thinking about this. I mean, obviously, some of the some of the stocks you follow are massive. You've recommended the banks, over the years, that kind of stuff, and obviously there's tons of liquidity. But is there a challenge because there's so many people? I mean, it doesn't matter what category you put yourself in. There's some portion of your portfolio, maybe a huge portion, maybe a small portion, that needs quality kind of companies that pay a dividend. I mean, that's been my number one recommendation, literally, and I'm proud to say, since March 2009, that's what we've been talking about on Money Talks, and that was the low in the markets. But that's been our theme on Money Talks. Get quality dividend payers. Not that, gosh, look at the track record that Keystone has getting small caps. And that's why I feature some of the work you do on that score, because I believe in it. But I'm just saying, for everyone can have room for quality dividend payers in their portfolio. And I'm just wondering, because of that, is it tougher to find them now? I mean, I'm talking about share size, that kind of stuff. Everyone's looking for the same thing.
It's never easy to find great investments. I mean, these opportunities, they're not just low-laying fruit, and that's the reason why we look at everything, and we're doing research every day, and we're talking to companies and reviewing management discussion and analysis, financial statements and whatnot. So it's never easy, but you are able to find those gems, and sometimes it's not a matter where it's just an obviously cheap or inexpensive valuation. Warren Buffett said once that he would rather buy a great company at a reasonable price than a bad company at a great price. So you can pay a higher valuation, but in terms of comparing that valuation, what's important is that you compare that valuation to the growth profile and the quality of the company. And even if you're paying a valuation which is, say, at the market average or a little over the market average, if you're getting a company that is far better than the market average, then that could be a good investment. So we do see these opportunities, and they're not easy to find, but sometimes it's a matter of being patient. You can find a company that is growing and the share price is growing, and then all of a sudden the market decides to become disinterested in it for a variety of reasons, and the financial performance continues to be strong, but the share price just kind of treads water for a little while, and as the earnings grow and the share price doesn't, then the value comes back, and then that becomes that's an opportunity to buy right there. So it really just comes down to diligent research and understanding the businesses and looking at everything. Just looking at everything.
You know, it's funny. I was just sitting here thinking that one of the challenges in your business and having, and Keystone has a fabulous track record on the small cap, and I love the work you do on the yield side of things, as I said, because I think it's appropriate for everybody to have a look at that. But one of the things, it's always a what have you done for me lately kind of business. You know, like you do exchange income fund and you're going, yeah, we're up 65% since we recommended it at last year's World Outlook Conference. And people go, yeah, that's great. What about now? And,
so you're saying I can't sit back for the next 2 years and talk about exchange and how well it is.
That's what I mean, you know. So are you going to have some other recommendations for us at the World Outlook?
Yeah, absolutely. We're going to have a portfolio of quality companies at the Outlook. This Outlook particularly is exciting for myself and for Ryan because he's going to be there, like you said, doing a small cap portfolio. This is the first time we're both going to be doing a keynote presentation. So between the two of us, the attendees at the event are going to have solid picks of high growth small cap companies and dividend growth stocks. And what we always say to investors is you start your portfolio with a core of high quality dividend growth stocks, and then you can augment that return by adding some higher risk, higher growth companies as well. And that's basically what we're going to be doing. But yeah, I've got several companies that I'm looking at right now and some really, really interesting picks, things that are paying nice yields today and that are growing those dividends over time. So we're really excited about this event and what we're able to do for the attendees there.
Got to take a break, come back. I've got Aaron Dunn on the line with me. You can find them at keystocks.com, keystocks.com, but come and meet them in person at the World Outlook Conference, February 3rd and February 4th. Back in a moment, we got much more. I got a great shocking stat. And by the way, this Goofy Award, this is destination living, because either you're going to hate it or you're going to think, thank God someone finally said it. I'll do that before we're done here today on the Money Talks Network. Coming up, Ozzie Jurek is issuing a sell recommendation on a specific type of real estate. He's going to give us the specifics right after the shocking stat. Excuse me. But right now I've got Aaron Dunn on the line with me, Keystone Financial. Aaron, I want to come back to something we were just chatting about. We talked about the Exchange Income Fund recommendation last year at the World Outlook, up 65%, 7% dividend. Now, has that become a sell recommendation because of the price rise? Do you still like it? How do we handle a stock like that? Hey, we're thrilled, we get a winner, but how do we handle it at this point?
So the way that we look at it is we look at how has the valuation changed and how has the outlook changed from when it started to increase to today. So relative to cash flow, the valuation still is quite attractive. Even though the company has increased in price by about 65%, over the past 18 months, free cash flow per share has actually it's more than doubled. So from a valuation perspective, it's a company that's still looking good. And then we look as well at future outlook. Is that growth going to continue? In the case of a company like Exchange, we're not expecting to see the same level of growth over the next year just because the acquisition market, the nature of the acquisition market is opportunities just, they come and they go, so they're impossible at the time. But what it does have going for it right now that a lot of other companies don't have is it has a very strong organic growth profile. So organically, they've been growing in the high single, low double digits, and we're expecting that to continue. They'll probably very likely do, one or two small acquisitions over the next 12 months potentially. So you're looking at a company now it still has a growth profile. It has good organic growth. It's trading an attractive valuation, pays that nice yield, is growing the dividend, but then you also, beyond all of that, you have the huge upside of potentially a major acquisition like they have done in the past. And eventually we believe that major acquisition is going to happen because it's something that the company has done successfully. You just don't know where to time it. So Exchange is a company that we are continuing to like for people that would hold it for the next 2 to 3 years at least.
You know what? This is put the Dunn's cap on my head here because I never asked you what they did because I'm familiar with the company thanks to your recommendation. Tell people very quickly what it does.
Okay, so it's mostly a specialty aviation company. So they've got several subsidiaries in that area, and they do a wide range of different things. They do airborne surveillance for governments. They do supply of remote communities. They do some search and rescue, some firefighting, some aviation training, aftermarket product part sales and whatnot. So there's a lot of different components in the business, and it's one of those things that you cannot just easily categorize into an industry segment. I mean, generally, if somebody says, "What do you think about aviation?" It's not normally an industry that I love, but with Exchange, they're really what I would consider a special situation company. They are in aviation, but in a very unique way. And their growth profile has not been so dependent on just growth in the overall economy. Like I said, we have lackluster growth overall in the economy right now, yet Exchange is able to produce very solid organic growth. So definitely a special situation business.
Yeah, it's going to be fascinating. I look forward to hearing you. And again, we're doing something special this year at the World Outlook Conference. As the conference starts February 3rd, we're going to start this at 1 o'clock, February 3rd. We're doing a whole section on searching for yield. Aaron Dunn will be there. You'll get a chance, and this is one of the things I love about the Outlook. Go talk to him in person. Of course, I'm looking forward to the presentation too, but go talk to him in person. Aaron, I look forward to seeing you there, and I appreciate you finding time this weekend for us.
Thank you very much, Michael, and we're looking forward to it, and we really honestly think that is one of the best conferences that we've ever been to, and we've been to a lot of conferences. We love the conversations there, so absolutely come and talk to us.
Great stuff. You can find them at keystocks.com. It's Keystone Financial, but try them at www.keystocks.com.